instead of getting everybody real comfortable, what I'm going to try and do is get everybody excited for a moment about all the accounting scandals, and then we're just going to get rid of them, not think about them again. But there's been quite a few accounting scandals in China. And one of the things I want to point out is that Enron, they basically hid their losses by conducting, derivative transactions with its own off-balance sheet vehicles. And then Bernie Madoff, of course, he went to extreme lengths to conceal the Ponzi scheme. You're going to fix that for me, aren't you? Yeah.
That's a nice thing about Silicon Valley, right?
Somebody in the room is going to be able to help us.
Somebody could do it.
So then, of course, Bernie Madoff, he went to extreme lengths to conceal a Ponzi scheme, which was a trading strategy. Now, there are corrupt Chinese companies that often actually use sales, inflations, and fabricating deals and inventing false customers. But to be honest with you, the scandals have been relatively not complex compared to some of the other ones with Enron and with the Bernie Madoff. So what I'd like to do is kind of give you some of the examples of some of the scandals that we've seen over there. For instance, Caterpillar, they had a $580 million write-down of a value of a Chinese acquisition where it claimed to have discovered major accounting irregularities. The charges related to an acquisition that Caterpillar made in China last year. It paid about $800 million for the company. But the target company's management team had apparently been fudging the books for quite some time before that, leading Caterpillar to actually write off this wildly overpaid acquisition. And then the next was China Public Procurement. They had announced a huge contract with a non-existent customer. This Chinese IT company actually claimed back in February of 2010 to have won about $48 billion contract to supply a purported subsidiary of a Chinese government-backed rail firm, and they named it China Railway Construction Materials Group. Well, a few months later, the Chinese newspaper, the Economic Observer, questioned this contract, and under pressure from Hong Kong Stock Exchange, the China Public Procurement Board appointed a forensic accountant who actually confirmed that this company actually never even existed. And then we had Hong Tech International. They had actually fake sales and a fake cash balance. We kind of mentioned this before. This is where a Taiwanese-owned Chinese fabric maker was forced to freeze the proceeds of the December 2009 Hong Kong IPO after its auditors realized almost 6 months later after the listing that there were, of course, discrepancies in the IPO prospectus. The auditors here had taken a second look at the prospectus after discovering that Hongtech employees had actually bribed auditors. So last June, Hongtech actually admitted in court it had inflated these sales and the cash balances, and for the years actually leading up to the listing. So Hong Kong's court actually ordered the fabric maker to return the $133 million it raised in the IPO. And then we have Real Gold Mining. Their biggest shareholder actually pledged listed company assets to a bank. So it turned out that the company thought it had owned the assets, but the owner had actually pledged these assets. And so they ended up, the details of this actually were all in the public domain. And having been filed with the China company's regulatory department, but Real Gold's auditors actually resigned months before they actually discovered this scandal. And the last I've got, Mulan Global Eye Care. They had a big customer that turned out to be a Chinese restaurant in Nebraska. This was bad. Back actually in 2005, the eyeglass maker, which operated factories in mainland China, claimed to be one of the biggest and largest companies of its type. It went bust back in 2006. Mulan was a prime example of how companies that fake their revenues got tied up in knots when they are unable to show the auditors the cash that would have flowed had it had the real sales. And what happened was the liquidators said that Mulan had created a series of phantom companies in the eyeglass business that allegedly owned or owed him money. And of these alleged customers later turned out to be, of course, the address of the Chinese company, or Chinese restaurant, rather, in Nebraska. So, kind of as I've mentioned all these are all rather common frauds, nothing too complex in them. It's the sort of accounting issues that are not by any means peculiar to China. These types of fraud have been employed, unfortunately, again and again around the world, and certainly here in the United States. So there's nothing new here, because when it comes to fraud, auditors should be trained, and Drew and myself, we are trained, right, Drew? To actually define these issues. But in the end, really what I think James was saying earlier is a thorough due diligence is necessary everywhere in order for you to make sure that you're making the right investment. So next on the front is going public in China. You kind of have, well, there's many options, but the two I'm going to point out here is basically submitting a formal application or employing a strategy of what we call a reverse merger. Now, submitting a formal application is the regular going IPO and going through that entire process. The other way that we've seen people going public here in the US and in China have also employed this reverse merger strategy. This is where companies may be looking to get in North America, they can take this path. And a reverse merger is basically, it's a private company, and you can do this in the US also, it's not specific to China, where you buy a public shell, which no longer actually operates, but which is listed on the exchange. And this private company then sells its shares on the exchange through an approval granted way years before this occurred. So reverse mergers are arguably less complicated than going through the formal application, but also they are less costly, and the time consuming is a lot less. But quite a while back, the SEC actually has issued some bulletins in China actually warning against them to do this reverse merger. So we're actually seeing probably more activity here than we actually are in China. And Drew, you want to address that?
Yeah, I would just interject for a minute. I mean, for all intensive purposes right now, although an RTO or reverse merger is just one way to go public, that form is virtually dead. I would venture, oh, I'm sorry. I was just saying that, although functionally an RTO works, if you plan to do an RTO in China, it's not, I would tell you that it would have little chance of success. You've seen so far, the Shanghai Exchange has virtually been closed down for the last 18 months. There's been more companies doing IPOs over there. And in China, U.S. markets, there's only been 2 for the whole year. Our firm did one of them, the last one, called China Commercial Credit. And I'm just going to take 2 seconds because actually that was one of the more interesting things about the conference. Up until right now, the thinking was that if you wanted to do an IPO in China, since the door for RTOs was closed, that it would have to be a big, what we call sexy, attractive deal. Because those are the only ones that have really gone. There's been 5 in the last 2 years. And China Commercial Credit was a very small deal. It was only about a $10 million raise. The platform, it's in the shadow banking business, not a particularly unique platform. Probably 2,000 other businesses that do the same thing. But it's generated, I can tell you, an enormous amount of interest because it's pretty much demonstrated that you can be a small deal and succeed. So, from the RTOs, I really wouldn't, look at those right now if you're thinking of doing, some sort of public structure. And you're going to have to pretty much stick to IPOs at this point. sorry, Marjorie.
No. I was going to say, and on the other side, kind of in the U.S. side, we're still seeing the reverse mergers. We're actually in the thick of them in our office, actually on quite a few. So in China, it's really been kind of dampened down, where in the U.S., it's still around. It's actually not one of the more popular ways to do it, but some of the advantages are certainly the cost, the time-consuming aspect of it. So we definitely see it. It's certainly another vehicle for people to go to become public. Next is actually going public in China, and kind of a little bit more details on what that reverse merger is. It's shell companies, their future benefits of the reverse merger are less time-consuming. The kind of the cost of it, of the IPO, it's usually around 7 to 12% of the total offering price, where you can get a shell. Usually we're seeing shells more like about $500,000 or a typical shell. They used to run about $250,000. I haven't seen one really that much for $50,000, but you've got to be real careful when you buy the shells also. So now, U.S. access to China. I know, Drew, you've got a few more thoughts on this. Everything, kind of, they opened the doors finally for us. China is now allowing us to go in and let the SEC and the PCAOB start to review the books on the side of China. One of the problems that we run into is, if you are an SEC CPA firm, if you're a CPA firm, you're an SEC CPA firm. If you're a CPA firm that does SEC audits for public companies, you must be registered with the PCAOB, and the PCAOB will come into your firm and review your work papers. Well, the problem we've had in China is they would not necessarily allow companies to come in and look at the CPA firms that were doing the audits in China. And part of the problem that the Chinese audit or China authorities cited was national sovereignty issues, and it was kind of the motivation behind this. Drew, you want to address this a little bit more about what's recently just happened?
Yeah, but what I'd like to do, because we have about 20 minutes left right now, if we're going to stay on time. So maybe what we'll do, as soon as you're complete, I'll have a few minutes at the end. There's some things I want to leave you with, and maybe Valerie can get into your presentation. How's that? Does that work?
Yeah, and you know what I was thinking about doing after this is actually, Stephanie, you want to start? I've got some questions actually that maybe all the three of us can talk about.
Okay.
Would you like to do that?
If you want, you can finish up, or I think, you don't finish.
No, I'm good. Actually, Drew and I will come back to this,
Sure.
okay?
Thank you, Marjorie. With that, I'd like to introduce Stephanie.
Hello, everyone. I'm Stephanie Xu, the first vice president and market regional development manager in Northern California. I was born, actually my family is from Shanghai side, but I grew up in Canton. So I speak Shanghainese, Cantonese, French, and English. But compared to the previous speakers, I feel embarrassed because I feel like they know more about China than I do. But the good thing is, with East West Bank, I deal with a lot of Chinese investors all the time. First, a quick introduction about East West Bank. East West Bank is a publicly traded and publicly owned company with $23.3 billion in assets. And it's traded on the NASDAQ with stock trading EWBC. Our stock is doing very well. You might want to consider investing. The East West Bank is one of the largest independent banks with headquarters in California. And East West Bank is also a premier bank focused exclusively in the United States and Greater China. We have over 120 locations in China, Hong Kong, and also we have rep office in China. Two full-service branches, one in Shanghai and one in Shantou. So why East West Bank? I think you can compare with other banks like Citibank, BofA. We offer whatever they can offer, but I think the difference is people. We understand the culture difference. And so now speaking of the fund side, I think everyone would need a banking service, right? Okay, so when you want to open an account, like say with East West Bank, I have a lot of inquiries coming from China side. Theoretically, you don't have to come here open an account. You have an investors in China, I can just refer you to your local branch or local rep office in Beijing, in Shenzhen, or in Santou. You can do a documentation verification, such like you show your local, like a Chinese ID or passport. We can get the ID certified, and then they can ship out the information to local branches here. We can help you open the account. This is very convenient. And also, one of the things that you mentioned earlier too is about the regional EB5 program. How many of you are familiar with EB5? Wow, quite a few of them. Okay, I personally handle a lot of EB5 accounts. Believe it or not, in America there are over 260 regional centers. Very few of them are doing well. So when you want to invest, you really want to invest in good projects. I'm not here to promote any regional centers, but do your own due diligence. And we handle a lot of EB5 deposit accounts. So any of you, if you have any inquiries about that, you want to open the account with East Bank, feel free to reach out to us.
Great.
Thank you.
Okay, we got about 10 minutes to go, and we'll take some questions. To come back to just answer the young lady's question before, the QFI program, it's called the Qualified Foreign Institutional Investor Program in China. And it was launched, I think, originally in 2002. And basically, it was a mechanism for qualified foreign institutional investors to invest directly into China. Now, I'm actually going to abandon my PowerPoint today. If you give me your card or something, I'll be happy to send it to you, because we only have about 10 minutes. I do want to leave a couple of minutes for questions, and there's certain things that I would like to cover with you. Recognizing that the majority of the audience is Chinese, I don't want to stand here and tell you about China. I'm a little uncomfortable about that, even with all the time I have spent there. But I do have some unique experience because I've spent so much time there. So from my own kind of position, I'd like to just, give you some of the rules that I've learned over the last 10 years that work both ways, investing in China and from China here. The first thing that you really need to do is take a look at the short attacks that have happened in China. And what we learned from the short attacks, because these are some of the most intelligent people that I've ever come across. Shorts can read a financial statement, and good ones can tell you what the chairman had for breakfast. And looking at what these people did, because what they principally did is they exposed the weaknesses of Chinese companies. Now, whether you're going to be investing into one, or one of them is going to be investing into you, I think those are things that you should be aware of. So really studying and understand what they did and what the result of what they did is very informative and useful. Whether you're investing to or from, it's so important to really understand what you're doing and what you're going to own at the end of the day, or what's going to own you. And one of the biggest mistakes that I think the investment community made when investing into China is that they didn't have a real clear idea of what the chairman's real goals were. The fact is that many chairmen didn't want to stay and build their company. They just wanted the money, and they were gone. Typically what we see is a company would raise $50 million. The chairman is not going to wait 2 or 3 years to, for the value to go up and cash out then. He took $15 million right off the top. And the company was, for the next year and a half, it looked like a great company because it was spending the other $35 million until, it hit the wall. So understanding what the chairman really wants to do is critical. Some of the most successful strategies of the shorts were, one, they made incredible use of what we call the SAIC reports. exploited the differences, whether legit or not, it worked. And probably the other one that I found so incredible is that they relied on the chairman to make really bad decisions in critical moments. I liken it to a heart attack. When you have a heart attack, whatever you do in those opening moments usually dictates the rest of the story. And when you make incredibly bad decisions, and shorts only need minutes to make their money, it's a very small window. The second thing is, if you want to do business in China or vice versa, you gotta have a presence there. If you think you're going to do business remotely, either way, you're just fooling yourself. So having a presence wherever you're going to do business with your own people on the ground that understand all of the variables is critical. There are all what I consider the normal challenges. That being time. For us, 9 to 12, 13-hour time differences. The distance, it's almost 7,500 miles. The language, culture, and as Crocker, mentioned, big thing, government. When I grew up, the Western world kind of ran economically the world. And it ran based on supply and demand. But in today's world, supply and demand doesn't really run the world anymore. Governments run the world. They dictate what businesses do well, they dictate currency, they dictate valuations. So understanding the risks of working in countries where governments control things is also critical. And whether you're investing in or to, especially with China, you have a lot of these, currency problems, right? You make a lot of money in China, but how do you get it out? So there's all those challenges. Hiring good professionals. A lot of Chinese companies really have, there's over 100 companies that we know of that have been attacked. And the short story would be that a bunch of Chinese companies were willing to misrepresent their financial statements, and enough of them were willing to do it that it created this momentum. And a lot of times when I speak, I have people telling me, like, those Chinese companies. Kind of infuriates me, because imagine if you said those white people or those Jewish people, to categorize people like that, because there's a lot of really good Chinese companies. We had a conference, we had over 50 companies there, many of them great companies. So simply, the market looks at it that way, but really what I see is the market really lost confidence in not just Chinese companies, but the whole system. They lost confidence in accountants because we're supposed to catch fraud. There's been a lot of fraud, and as a group, I don't think we've done a great job. They've lost confidence in the lawyers because the lawyers have gotten hundreds of millions of dollars. And there's not a lot of clarity in the market right now. I'm working on one case right now where a law firm was hired by a Chinese company, worked for them for 18 months, and the company was bankrupt. Their bill was $10 million. Now, how do you charge somebody $10 million for 18 months of work, and the result is the company's bankrupt? They're upset at investment bankers because they took a lot of companies public that didn't belong going public. And after they took them public, they didn't give them the support that they really needed to be successful. And lastly, it's a very unfair playing field right now for Chinese companies because people like shorts and whistleblowers, we see a lot of that, only have to be less than 50% right to destroy a company. And the company has to be 150% right, suffer through the embarrassment, and they need luck to get out of it. So it's not as simple, I think, as one would like to believe. And, I certainly think that there's been a lot of other factors other than the Chinese companies themselves. So hiring right now, good professionals that have reputation, that ability to work in that market, not a brand name. I think, there's been a lot of confusion over brand names, but brand names don't do work, people do work. So, when you hire a big name firm, you need to do more diligence so you can see that they can demonstrate that they have resources and capabilities to do the kind of work that you need them to do. I've seen investigations go on for 10 months with millions of dollars spent and no conclusion. Well, a public company can't survive that long, regardless of whether they did something wrong or not. That 10-month investigation. I think that for public companies right now, especially to be successful, especially Chinese companies, they're going to have to do things that are unequivocally good for investors. And what I mean by that is they have to be able to do things to convince the investors that they're credible. And I can't think of one thing that will do that. I think, well, if the SEC agrees and inspections start tomorrow, is that going to make it better? And the answer is no. It's going to help, but it's not going to make it better. Things that will make it better if companies can do a multitude of things that investors just see as being positive. Paying dividends, number one thing on the list. I never heard investors complain about getting dividends. Owning things in simplified structures. Hiring good professionals, having a good board of directors, finding strategic investors. One of the strategies has been to get away from being labeled as a Chinese company and being an international company. Building up cash, right? Because if you have a lot of cash, people don't worry about you doing pipes and polluting other investors. But those are just a few examples of things that Chinese companies can do, to attract more investors. From the other side, I think that there's enormous opportunities for cross-border transactions. That's why we're all here today, to try to understand it, promote it, and kind of simplify it. Any questions? I think, we've just about run out of time. We've got 3 minutes left. I am going to be here for the rest of the day, all of us will, so you feel free to grab us on breaks and stuff. Any questions?
So curious about, would you think of some of the creative ways or effective ways, I would say, to do the due diligence for cross-border transactions? So I'm curious, what are some of the methods that you're using, any different than other companies?
My simple, quick answer to that is to be involved. Now, if you're a U.S. company and you've never been to China before, then you need, it's not as simple as just hiring a bunch of professionals. They come back to you and they say, everything seems okay, we couldn't find anything, so you go ahead with the transaction. If you're a U.S. company and you're going to invest into China, yeah, you need to do your own due diligence. You need to go on the ground. You need to go there. You need to meet the chairman. You need to really dig. One of the ways that we cope with it as a firm is we have very little turnover. We highly value our employees because I don't think there's any better way to do it than experience. So most of our people, they're all ex-Big Four people. They have numbers of years of experience with us. They've all been into 30, 40, 50 companies before at least. So that's what we rely on. Any other questions? Sir?
Yeah, I was asking maybe, I'm interested if there are any opportunity for just pure banking transactions or like some kind of cross-border other than
What do you mean by pure banking? Can you be more specific?
start up
The company?
yeah, change money change.
Oh, money, okay. Well, for the currency issue, are you talking about having transfer the money from China to USA or vice versa? Well, mainly from China to USA because they have foreign currency restriction. It's up to 50,000 US dollars per person. So there's a restriction there. But I do see a lot of money coming from China side legally.
Let me just chime in on this. The Chinese banking, what you're talking about, there's some, as you know, there's a lot of restrictions on moving currency. We've had a lot of meetings with banks, and a lot of the banks have been exploring what used to be known as what they call back-to-back loans. Basically, where they're using your money in China to guarantee loans here. It really hasn't matured yet. So most of the money coming out of China right now is either coming out, through the black market, trading companies typically. We audit a lot of companies that tell us, we paid this trading company $10 million, but we don't really owe them any money. They're paying our bill in the United States, and they pay a fee for the services, and that's all part of the shadow banking business right now, because there's very little mechanisms for middle market and micro cap companies for funds. But that is a big issue right now. And the real banking relationships have been more between the Chinese banks and the Hong Kong banks.
Yeah, we also have this kind of program is you have a headquarters doing business in China where you can deposit say up to like 10 million, several $7 million equivalent of RMB at the bank in China, and we use that money as an issue of LC. We can use the LC as a collateral and do a loan here in US. So this is very very common now. Yeah, it's getting more and more popular.
I think last one.
Yeah. Really quickly, so a lot of this doesn't make sense. We talked earlier about folks coming into the U.S. market, heavily investing, like second in the world next to Canada in real estate investments. And I know the Li Ka-shing Foundation with Horizons Ventures is here in both London and San Francisco. They're getting more than 50,000 RMB or K out of China. So how are they able to do that versus everything that was just described there? It doesn't make any sense to me. Can you explain that?
I'm not sure I understand the question.
Well, you said there's a 50K limit for individuals to get money out of the
maybe,
country.
yeah, they can
So is that
always
just
find a
for
way.
normal people or
Well, no, there's a $50,000 limit per person.
Per
You know how many people Chinese people know?
Well, that's true.
Yeah,
Okay.
let me give an example just for EB5, right? It's
Sure.
like a $500,000 per investor.
Sure.
I have seen the transaction, they can maybe ask for friends and families up to like 20 people per person. And then I see wires like 50,000 coming in on a daily basis. That is totaling up to $500,000. So this is like a very, I would say, individual case. For a company, they have a lot of ways to go.
And the truth is, as I told you, that, the 1% of the population that had 70% of the wealth, much of those people were government people. So it wasn't very difficult for them to get their money out. Certainly